A very common analogy would be to consider term life insurance equivalent to renting your home, and permanent or whole life insurance would be the same as owning your home. When you rent your home in the early years, it's fairly inexpensive, but if you stayed in a rented apartment for long enough, the rent would keep going up. And that's the same with term insurance. The price goes up over time as you get older because the risk of you dying is going up. And someday you'll get kicked out of your apartment many, many years from now, and that's when the term insurance ends, often at age 75 or 80, and you don't get anything back for it. After that point, you just walk away and all the premiums you've paid are water under the bridge. Whole life or permanent insurance, though, is like owning your home because you have value in it. You build up equity. It's more expensive than renting to start with, but because it costs more, some of that money is being invested within the policy, and that's building up equity like you would build up equity in your home as you pay down your mortgage. And down the road in the future, when you want to cancel that insurance, like selling your home, you get something back for it. You get back that equity that you've built up over time. Term life insurance is perfect for a young couple with children, for example. They have a large insurance need. If they have a mortgage and they have a young family, they need to worry about paying off that debt if one of them passes away, and they need to worry about replacing the income of the deceased parent. So they might have an insurance need that is $500,000, $600,000, $700,000. And also, being a young couple, they may be on a budget. So term insurance allows you to purchase a larger amount of coverage at an economical price and cover off that insurance need. Whole life policies become more attractive to people once they become more established financially, and they've addressed other financial priorities like saving for retirement, paying down their mortgage. And now they have disposable cash, and they're looking at ways to make that cash work for them by investing it preferably on a tax-sheltered basis. And whole life insurance lets you do that. And they can build up value in the long term, which can help them when they pass away with things like estate planning by minimizing the tax bill and by having resources to cover the taxation on death.